Welcome back to the channel. My name is Patrick, and in today's video I'm going to show you a scalping strategy based on order flow. Okay, so we know these charts are based on orders. Okay, we are not necessarily the ones that's moving the market, but the people who are moving the market place orders as well. So they place buy orders, they place sell orders, and for these orders to be placed and for price to be moved in certain directions, it's a lot of orders, and especially if it's moving quickly, this is a lot of orders that's being placed to move the market. Okay, now our orders don't move the market. That's our orders, less than that. Okay, that little move there, that's our orders. So you can imagine the amount or the quantity of orders it needs to take to do a move like this, like a 50 pip move straight down. That's a lot of orders. So the theory based on this strategy, based on order flow, is that when price returns there basically there are a lot of orders placed and there's a lot of orders unfulfilled. Okay, better way to explain it. And because these orders are not being fulfilled, when price returns there, the market's going to try and fill these orders before it continues its trajectory, whether it is up or down, right? It's going to fill these orders because it's an inefficiency and the market's trying to correct itself essentially. Okay, so a lot of you may know it as you got the pole, you got the pullback, and that pullback is usually when price is going to fill in a gap that is inefficiency is created. So imbalance, that's the inefficiency. When it gets back to that imbalance, it usually reacts. So previously on the channel somewhere, there's when I first started scalping, I was talking about scalping imbalances, H1 imbalances. When price gets there, getting a quick reaction. Now I'm going to show you how to do the same thing, but using the flag and pole formation, because it's the same thing. It's visibly the same thing. It's just it looks slightly different. Both of them are based on order flow, and we're just scalping the reaction when price returns to those zones. Okay, so I did take one of those trades today, this morning, and I'm going to show you that example. So but while we're here on the higher time frame, this is where I learned how to do it. I just wanted to show you an example. So we have price trending up here, puts in a reversal and starts coming down. So it pulls down, flags up, pulls down. Okay, flags up and pulls down again. So at this point here where it pulled down, it stayed here and it come back up and it went down. This is an interesting point. We're just going to zoom in a little bit more, and I'm going to mark out 3 key price points that we need to be aware of to take this setup. Okay, there are 3 places you can enter from. There are 2 I prefer and 1 I just don't touch. Okay, so this move here, that when I broke this structure here that broke that low, was based on this candle. So this is a pivotal candle for me, or better yet, this candle. Okay, because it's more or less in line. This is a pivotal candle for me. Okay, so we're gonna mark it out. Yeah, this candle is more important, this low is more important. Okay, so at this point where this candle broke that low, this is known as the breakout point, where it created a lower low. Okay, based on this. Yeah, that's the breakout point. It's reversed there, broke structure here, and it started moving down from here. The origin of this move down, was the highs of this point here. Okay, this is known as the origin. This is where it started and made the decision to go down, because remember it was trending up before. Just zoom out a little bit. It was trending up before from this point. That's a low, higher low. At this point here, it should push up, but it decided from here to start going down. Okay, this is the origin of this move here. Okay, so let's just zoom in a little bit. Okay, cool. Now, where did it make the decision? Where was the exact point it decided this candle decided to go down? We're going to mark that out here. So where we got that little resistance here, that's the decision point. Now, my videos, previous videos, this is the imbalance I would normally trade. I'll let price return there and I'll scalp that. But as you can see, it's the same with the pole and flag formation. don't know if I mentioned it already. I will leave a description in below so you can follow the link where I learned this, and it's going to give you more detail. I'm just going to show you this example and show you the trade I took this morning based on this. Okay, it's all based on order flow. The video goes into more detail about order flow and how to manage your risk. Okay, so that's the decision point. So breakout point, decision point, and origin. Okay, that's our three key price points. And when price returns to there, we're expecting a reaction, and the reaction is what we're trying to scalp. Our stop loss, quickly, risk management. So it's pushed down. When price tries to return to that, we're scalping. If you can enter here at the breakout point, your stop loss is above the high or the low, depending on which direction. In this case, because we're trending down now, or it's going down, we're looking for a sell, so our stop loss is above here. The breakout point where I would enter, where you could enter here, and I'm looking for a reaction, is here, right? Now, in terms of TP, I'm scalping the move. It can go significantly further than what I intend to scalp, but I'm happy with that. Because in some cases it's just a small reaction. What I'm looking for is the reaction. I'm not looking to see how further it's going to go. It does go a lot further, but what I'm looking for is 10 pips. When I was taught 15 pips was good, that's what I was taught, 15 pips. I back tested it. I like 10 pips. 10 pips was more frequent in, for me it's easier to get, so I decided to do it on 10 pips. So as you can see, price entered there and reacted straight away, giving 18 pips, 17 pips before the close of that day. Okay, so the next day it came to the decision point and it reacted from there. It drew down a bit. Here it didn't draw down at all. Okay, there's no drawdown. Here it drew down a bit, and it drew down about 16 points before running and giving 90 points, or 10 pips again that we're trying to scalp. Okay, so you could have actually got two trades just based on this little candle. And what's interesting now is if you zoom out, you see the potential of this move. So we have found the exact point here where we could have entered to catch this move, which was 180 pips move. Okay, so it's very, very powerful. It is based on order flow. It is in line with supply and demand. It is in line with what the market does. So beneficial to learn, no? So I'm going to show you this example. So that was the sell example based on the highest time frame. Just showing you the example of the pole and flag formation, but using order flow to catch a scalp. And I'm going to do the same here. So this morning, okay, so had a very good day yesterday, trading my setup down, saw this reversal here, traded it up, and then I was watching to see what was going to happen next. I don't take no trades at this time. This was just, this is way past my session. This is before Asian session would have started. Okay, so price normally when it gets to this point here, what it does is consolidates here and stays there. But yesterday it pushed up. I watched this. I just didn't understand what was going on. I had a look. There was no news due at that time. It just didn't make sense. It was very bullish. Someone knew something I didn't know. So that's the way I saw it. But also the way I saw it is, this is a pole and flag formation. We have a little reversal here. Reversal led to a pole, a flag. I scalped this, by the way. So when it broke this high here, I scalped this going up into the any 6 pips. So we had a pole, a flag, a pole, a deeper flag here, and from here it was meant to consolidate, but then it just broke out from here. So let's mark it up. So this low here, so that's our pole, that's our flag. This low here is the low of that flag, right? So that's our origin of this new pole up. Cool. Let's mark out the breakout point, easier to see. Breakout point is the top here, okay? Right. Now the decision point, where it made the decision to start going up. And we're going to look at these, the resistance here. So you can imagine at this point it's resistance, trying to push down, trying to push it down. And at this point it said, no, I'm going up. So it broke out from here. It made the decision to beat this high and beat this high from here and continue going up. So those are 3 key price points. Our stop loss is underneath here, the origin of the move. Our first entry could be here. Our second entry could be there. And when price comes back to there, we're looking for reactions from both of them. So the way I was taught is you could place pending orders on all 3 if you wanted, but I back tested. I like the breakout point. I like the decision point. Breakout point usually gets the first reaction from the zone. Sometimes problem with breakout points, you may get a lot of drawdown for it to try to go to the decision point or even the origin. So that's a problem with that. But it does give the first reaction. Sometimes you only get the first reaction and it just goes off. Okay, the decision point here, I do like it as well because it gives me a better risk to reward. Okay, but like I said, I do prefer just to get in as soon as possible based on back testing. I want that first reaction. I want all those orders that's resting here that are unfulfilled. When it reacts, I want to be the one that catches those moves, those trades, okay, that move up. So from the breakout point, I am risking 16 pips. I'm not asking for much. 10 pips, I'm good. In this case, I was only looking for 6 pips because this is a supply zone. This potentially is a reversal. So we've got it potentially going up, continuing going up, and currently going down. So it's bouncing from zone to zone. So I'm going to play those zones. So I'm going to take it from here and try to get back into that zone. And in this situation, to get back into this zone from there, it's 7 pips. So I'm happy at 6 pips. Okay? Because as soon as it gets in that zone, it could come back against me. So we don't know what's going to happen yet. But we did get that reaction. Got into this zone and it got pushed down again. And look where it reacted. Smack on the decision point. So the decision point, so breakout point first gave more than 7 pips. It gave 9.8. Yeah. The decision point, this entry here, gave, I think, 15 pips. Okay, so that's what I was taught, that from the decision point you could get 15 pips, right? Cool. So this is the strategy. This is how to use it. It's not ideal for everyone because it works with a negative risk to reward ratio, but as you can see in both situations, the drawdown was about 2 pips there, and the drawdown here was about 2.8 pips. So in both situations, you don't get drawdown much, okay? And your stop loss is there, so you're good. You have nothing to worry about. But the thing you need to understand is what we're doing is scalping based on order flow. We're looking for a quick reaction. So there are better ways to manage your risk if the move is not going in your direction, whether you move to break even at a certain point. So if it's 50% into your take profit, it shouldn't come back. We're looking for that reaction. It should go straight to TP. Yeah. If it does come back, maybe it would run you out, right? So you can move to break even, or you could just take the TP earlier. So there's different ways to manage your risk. And like I said, in the video that's going to be in the link below, it's going to go into detail on all of that. Okay. It's a very useful resource, and I decided that I'm going to share it with you guys today. And if you do find it useful, again, let me know. Any questions, let me know. Hit the like button if you find this video useful. Hit the subscribe button if you want more examples, and I'll keep on getting them out to you. If you have any questions, let me know, people. I'm here. All right. This is Patrick signing out. Until next time. Peace.